I am the Chief Market Strategist here at Think Markets, and we're going to cover all major markets, talk a bit about the market fundamentals, and see what's happening this week with the economic calendar. Before we start though, as always, I need to stress that trading financial markets unfortunately is high risk. A lot of people don't tell you about this, but we may lose all of our invested money. And that, guys, is usually coupled to trading with just too much leverage. So if you can control your leverage usage, you'll usually be fine. Bear that in mind. Okay, let's talk a bit what happened last week. So we had risk off. What does that mean? It just means that markets are coming down. So the Nasdaq 100 dropped with 6% on the week, and the weekly range in Bitcoin was about 8%, with both Bitcoin and the Nasdaq 100 pretty much ending by the lower end of their range. As well, Euro USD was up with about 129 pips at one point, but then gave back some of his gains, because when everybody gets worried and everybody's selling stocks and oil and crypto, then usually people go to the safe haven, which is the dollar. So that's why we push a little bit lower. Also super interesting, oil reached a fresh 2024 low, and I'm going to show you a chart by the end of this presentation. This is going to probably shock you. It shows oil prices trading substantially lower on the basis of the big pattern that we triggered, and obviously the economic conditions. So you might wonder what actually triggered this sell-off, what caused this to go down. Well, it's the US ISM manufacturing data. Okay, the US ISM manufacturing data was 47.2, which was lower than the 47.5 expected. New orders, they also dropped, so they dropped to 44.6. The lowest since May 2023. In addition, export orders and backlogs signaled weakening demand. What does this mean? Well, when we create the ISM index, people ask the manufacturers, are you getting new orders more this month compared with last month? And they need to answer unchanged, more orders, or less orders. How about your export orders? Are the foreigners buying your products? And then they do the same. So with these subcomponents, they create the ISM index. But with these subcomponents, you can also try to figure out what's going to happen next month. And the data here, guys, is not looking too good. So ISM and the manufacturing sector is probably going to be suffering next month as well. As well, as the week progressed, we got data on the service sector, and that was also not very good. It was at 51.5. Now, that's not great numbers for the service sector. And then you had data, labor market data. So you got ISM services, ADP. The US economy only created 99,000 new jobs, lower than the 144K anticipated. On the flip side, what was good is jobless claims. So jobless claims was actually higher than was as expected, and it's been flat for 4 weeks. Now, if you remember, in the weekly market updates we do on thinkmarkets.com, we've been warning about this weak data and the non-farm payrolls and the ADP with the help of the jobless claims numbers, because they are weekly, the other data is monthly. So what it's telling us here is that, at least for now, jobless claims are stable. Okay, that's obviously great. So we might have slightly better NFP figures next month. I'm not really sure too much. That's the ISMs are telling us not, but at least it's not like full-blown panic. Okay, so that is what's happening there. And then at the end of the week, we had the non-farm payrolls, right? 142,000 new jobs created, which was below the forecasted number. And not only that, the previous month's figures was revised from 114K to 89K. That's a very weak number. And this is just the first revision. We might have more revisions that can take this down lower. And the negative to some extent is that inflation is a bit high, because hourly earnings actually increased, showing that there's a bit of wage pressure still in the system. Now, this information, so far, the way it looks like, it's more 50-50 if they're going to cut with 50 basis points at the September 18th meeting, or if they're going to cut with 25 basis points at the next meeting. I think in general, given the bad data, the bearish trend in the Nasdaq 100, in crypto and oil are likely to persist. So there's no reason today for people to be like, oh, let's buy oil, you know. Some technical traders might say, okay, let's buy oil because it's cheap. But if you look at the fundamentals, the big players, they're going to be, the data is not looking too good. Let's actually take a step back. Let's see what happens with the data, and then maybe we can, buy it at one point. Because the technicals and fundamentals right now telling us do not buy oil, do not buy the Nasdaq 100, and do not buy crypto. So, what about the dollar then? Well, up until recently, and still, people think that the US economy will continue to weaken. So the US economy will weaken. On the other hand, the European and UK economy will continue to remain strong. If that is the case, then Euro USD can continue to trade to the upside. If that's not the case, then we'll see Euro USD trade lower. If you look at Australian dollar versus the USD and the New Zealand dollar versus the USD, it's still the case. I'll show you the charts in 1 minute. Because before I show you the charts, I just want to show you this. So this is the UK claimant. And what's interesting here is that we have data coming out on Tuesday, UK data. And that's interesting for GBP USD and Euro pound and pound yen. On Wednesday, you have US consumer price figures. If they come in really weak, then yeah, maybe 50 basis points cut. And that would not be good, guys. That would not be good, because it will be an indication that things are not good in the US. What else? We have ECB rate cuts on Thursday, 25 basis points most likely. So cutting rates to 4%. The question is what's going to happen afterwards. And then you have as well PPI. But I think the PPI is going to be matterless given that we have the consumer price data out earlier. Okay. Let me just check something. Okay, good. All right, so let's move along here then. So Euro USD, this is the trickiest one, because as you know, I was bullish here on the break to the upside. We gained nicely. Congratulations that we were able to capitalize on that. And then we push back to support. And the price bounced from these levels and continues to be bullish above 110.25. The problem is here, if I think the Nasdaq 100 is going to come down lower. And if the Nasdaq 100 is going to come down lower, then there's a high risk that 110.25 breaks. So if that happens, we can push a little bit down. And I think maybe down here at at 108.96 and 109.53 that people might be looking to buy between these two levels. Let me actually show you the Nasdaq 100 or the S&P. So this is the S&P. S&P is bearish below 5,562. So this might go up just because it's oversold, and people might look to sell here for this to trade to the downside at 5,334. But it's down here at 5,161 that long-term traders will be interested to buy. And if we're down here and Euro USD remains above 110.25, then I would be comfortable. If S&P was down there today, then yeah, I would be very comfortable buying here at 110.25. But I suspect if the S&P indeed trades lower, that it might be a better opportunity to be bullish from lower levels. This is the dollar yen. So the dollar yen, if it trades below 140.17, which is the low from 2024, we could probably go down relatively easy to 137. Okay, very easy. This makes perfect sense. Data's coming out badly, and we potentially heading towards a recession. As well, the Bank of Japan might look to raise interest rates at one point. We remember Tokyo Consumer Price Index was at last week, higher than expected. Obviously not great. So this could easily break the downside. Now, I've been looking for this to bottom out, but I've been wrong here. It is still above 140.17. It could bottom out, but it might take a couple of weeks for this to turn around. For example, if the S&P 500 was down at its low, so people would buy the S&P 500, and this is still here, then yes, bullish, I would say. But for now, with stock markets coming down, and with Australian dollar, USD coming down, New Zealand dollar versus USD coming down as well, I think this can go low. What about crude oil? Crude oil was stuck in a big wedge. So this wedge started forming here from mid-2023. You have this trend line here and this downward trend line here. So the difference between this point and this point is $17.89 per barrel, we trigger this pattern, and as long as trade below 77.43, we can go down to 70, 65, and maybe all the way down to the target at $57.92 per barrels. Now, of course, this is going to take a couple of weeks, and it's not necessarily going to be super easy. But if we bounce to the upside, I think people are going to be selling, and then we can push to the downside. All right, here are gold prices. So gold prices are at neutral to some extent. They're bullish in the long term. We said a couple of weeks ago buy here for this to go to the upside. It went up, and then we said buy here, and then we said buy here. And it's been good both times, but now it's sort of stalled. This is a nice rectangle with a break to the upside, potentially lifting the price all the way up towards 2,586. And the break to the downside, triggering these lows here, which is a break of a double bottom, which can take you down to 2,412. Now this, again, I think we just need to be neutral. If you see stock Euro USD breaking lower and GBP USD also breaking lower, maybe because of the data we have tomorrow, then this could probably go down. I know this is a bit conflicting because gold is supposed to be a safe haven. But even if it's a safe haven, and it's usually okay to buy during recessions, it can still have that massive volatility. And S&P were recovered, bounced to the upside, and then short selling. And I think that's, well, before I forget, this is crypto. So this is the Sol, something that I think Marcus offers as well. So it's like a darling for the industry. Like people love Sol. It's gonna be the new Ethereum. But the reality is this is forming a massive descending triangle pattern. And if we trade below 119.32, then the difference between this point and this point suggests we can go down with about 36%, which could take you down roughly to the lows seen here. It looks like January, February 2024 at 76.87. And with that, guys, that was the main part of this presentation. Let's now see here if we have any questions. So the question is, do you think the dollar yen will reach a new low this year? I would argue yes. Unfortunately, the way things are looking right now, I suspect this is over. The big push. It's been a very nice trade, like last year and this year, in just being bullish the dollar yen. It's been a really good one, the carry trade. And the reason why I'm saying this is that normally, if you look, when the Fed cuts rates the first time, it tends to have that we are already in a recession, or we will head into a recession just a few months later. And that statistic is higher than 50%. In my experience, since I started to watch these markets and watch the Fed since 2005, when I was 20 years old, is that the Fed is always late. They are too late to raise interest rates. I mean, look at inflation. We had huge inflation. It's because the Federal Reserve and governments were giving out free money and supporting the economy during COVID, right? And they were not able to rein that in. And just the years before that as well, they were saying the weakness in the economy is short-term in nature, but it never is. We always have recession. So if that's the case, then we're probably going to break the downside, okay? Which means that, unfortunately, dollar yen probably go lower. That's what I think. Okay, it looks like we don't have any more questions. Remember the time. It's this time every Monday at 9:30 a.m. London time. If you're watching the recording, you are most welcome to leave questions in the comment section, and we will come back during the day and during the week to try to help you to succeed in the markets. Thanks so much for watching, and I'll see you guys next week. Goodbye.